Alright, what's up guys? First of all, I want to apologize for the if the sound sounds a bit off, and also if the image quality is a bit off. It's my still new to this, but yeah, without further ado, I'll get straight into it. Show you guys how I managed to get this to around 6 short on ONDO. So yeah, if you aren't familiar with the concepts that I definitely wouldn't say I teach them, but the concepts that I practice for my trade. So we'll go towards a higher time frame here. Yeah. So you can see, obviously, we had that massive liquidation event all the way back in October. And yeah, like this is a big candle that most of it probably won't get filled, but you do want to see price at least fill like a good 20 to 30% of it. So yeah, I'd still like to see price come back to around these levels. Will it do that? Can't say yes or no, but yeah, I do think price will go at least a little bit lower and fill out a bit more of this. But yeah, so so far we are in ranging price action. So yeah, you could sort of can pinpoint this out. We're at a low, high, lower low, lower high, and then we got now you can just see it's ranging price action, higher low, lower high, and then we're about here. So yeah, we are in a bit of a daily range at the moment, which is when you can catch quite a few opportunities. So if I look on the 12-hour, pretty similar, we're in ranging price behavior. So what I wanted to do was essentially catch some sort of this range and catch some low time frame movements, which is pretty much what I did. So what I was able to identify here, obviously we had that much larger range on the daily and 18 hour, but we have a range formed right here, which I did draw out. I am in replay mode as well, so obviously I've already taken this trade, hence why I am recording this video. So here we are, and yeah, so this was my range. This was the range high, this was the range low. When drawing ranges, I normally like to see what is the highest time frame this range can go, and I do like to use the 2 candle rule whilst I do that. So 2 candles, that means, yeah, I don't want to go into explaining too much because I can save that for another video, but just based on looking at this, we have our high here, we've got 2 consecutive bearish low, we've got 2 consecutive bullish up, 2 consecutive bullish low, 2 consecutive bearish here. So yeah, this is at least a 2-hour range. 2, 2, 2, 2. Yeah, so this is around a 2-hour range for me. We have our first range deviation, prices come back into the range, which is what you want to see. And then we have our second range deviation there amidst all these drawings. But yes, this was our second range deviation. We're going to look to see exactly why it came in here, why did it not go higher, and then why we took the trade that we took. So going into the 30-minute, I believe 15, okay. So here we have a 15-minute supply zone after this first range deviation right here, and we can see price came in ranged once again in a much lower time frame, probably around 10 minute here, then deviated. Why did it deviate? It wanted to mitigate this supply over here, this supply left behind. The market maker wanted to come in, mitigate this supply, and from here you would like to think that it would start coming back down because it's created this third tap, but it hasn't confirmed our entry. So let's stay in replay mode. I do not want to exit. Let's have a look here. Okay, so this is our low. Why was this our low? Because we have consecutive bearish candles, one lower than the other. That is our low, and that is essentially the target that I want to break. Similar to this, so once we've mitigated this, once we've left this supply up here, we've created this low, but there hasn't really been, I mean, there hasn't been a break of structure in this area, so there's no reason for us to enter a trade, and we've also got this supply up here. So let's see what price did. Came up, mitigated this supply. Now, it's come up, it's mitigated this supply. Still no reason to trade because this is our market structure low. We're not going to be trading until we break this level, but price can still create a little range here, which is what it is in the process of doing. Once again, this trade has already been taken, but we can fast track again, and we have created a very low time frame range, because initially this was our range low coming here, and then this was our range high. So let's go into an even smaller time frame. Hopefully you guys are seeing me all right. Not that you need to see the charts. Let's go even smaller time frame, because this is a this qualifies as a 5 minute. Yeah, it does qualify. It qualifies as a 10, 2 consecutive, 12. Yeah, okay, so we've got a 10 minute range here. Let's have a look what happens. You know what, we'll go 5 minutes because it is, we do have more candles to look at. We've made the range our initial range high, which is where that little, we moved it. Our range low, deviation 1. This is our first deviation. Let's see what price continues to do. Bang. This is our second deviation, sorry. So we have a nice little distribution forming here, right? If we look on the higher time frame, this is still a distribution model, as we have our 1 tap, we have a 2 tap, we have that was our initial 3rd tap, but because there was no trade opportunity, price continued to range in this, and it went higher. It made this tap, and then it made this 3rd tap, which now on this high time frame model, this high time frame range, this is now our new 3rd tap. So theoretically, we could be looking for shorts here. So yeah, obviously I've already drawn this out earlier, part of my trade. So created this supply here, 5 minute supply. Is it 10 minute supply? No, 5 minute supply, right? This was 5 minute supply at one point. I think it was 10 minutes as well. My apologies. Yeah, this was one big supply chunk right here. Okay. Let's see what price did. Bang. So that's why it was drawn up as mitigated supply on my end. Up to here was mitigated, because this was all one supply block, which price came back in here to mitigate. This initially was unmitigated supply, so price did not tap back into it. There's still a possibility that price could come in to mitigate. Now it has mitigated this supply, and same thing. As we can see here, this was our market low, because consecutive of 2 bearish candles going down, and we also had a consecutive of 2 bullish candles going up. So this is legitimate market structure, because we have a high here, high, have a low, we have a high, we have a lower low, but yes, this is a break. Break would have been right here. I was about to point, but break would have been right there. But why did I not trade? Because I was waiting to see what price would do. So came back up, came back down, created that supply, mitigated this, mitigated that. Now this is our market structure low right here. Okay. Let's continue back on the 5 and see what price does when or if I enter the trade. So there we go. Here we created a SFP, created another SFP. Now here we broke structure. So I'll draw that to make it as clear as possible. That is our low. Structure is broken right here. Excuse my terrible drawing. There is our market structure bearish break. Once again, guys, I'm just starting to sort of record my trades from a capture perspective, so I'm very slow at explaining this. That is the break of structure, and if we look here, there is no. There's no real sort of at this point. There's no real supply left behind, at least from what I'm seeing here. Yeah, there's no real supply left behind because there just is not. So in this little range that we've created, there's a few other elements to this. Second one being is this range is very inefficient. And what I mean by the range being inefficient is that if you look here, once again, that's our range low, that's our range high. All this is empty space. The market needs to fill this, right? Eventually, prices are going to come back in here and just fill this empty space. That is what markets do. They hunt liquidity, they generate liquidity, they fill or create inefficiencies. So right now, it is both taking out all this liquidity and filling this inefficiency here. So I entered right there. Now, because I'm inside of this very low time frame distribution range, I'll get my short position. I entered there. I will always put my stop loss just above this range high right there. Now, normally in a higher time frame model, you would target here. You target the range low. As you can see, 0.62 risk to reward. That is terrible. So you would not be targeting that. I'm not a fan of how this camera looks. Like that. You would not be targeting that because we have already done our higher time frame analysis and we are in the premium section of a much higher time frame range, right? We're in the premium section of a much higher time frame range. We're in the premium section up here. We've already done our one tap. We've already done our second deviation. We have pretty much done our third deviation. There is not much more reason for price to come up and maybe deviate once more and come back down. It can do that, but there's just no need, because if we look at the lower time frame, which is what we are doing right now, all this supply that's left behind has been mitigated. That was supply. It's now mitigated supply. This, on the much lower time frame, on the 5 minute, this used to be supply, it's now mitigated. This was supply, it's now mitigated supply. So we're taking out pretty much every single supply left. So when you see sort of a sequence of supply getting created and mitigated at the same time, then you're sort of figuring out that the market maker doesn't want, at least anytime soon, the market maker does not want to bring price back up here. So that is our entry. And our stop loss is simply if I can sort of get to this, our stop loss is simply our range low. Because yeah, as I said, we're in a much higher time frame range, and this high time frame range is essentially showing the same thing as the lower time frame range. We have a very, very big range inefficiency here. There's a lot of empty space. You can see it for yourself. And all these points here, liquidity, 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 liquidity. So that was our lower time frame market structure break. Right, if we look here. So we are now entered. What was my thought process after entering? Because it wasn't just press enter and hope for the best. There was a method to this on the 5-minute. This is valid 5-minute structure. We have two consecutive bullish candles going up, and then we have a minimum of 2 consecutive bearish candles going down, signaling this is 5-minute. This is a legitimate 5-minute time frame. We've broken structure. My next structure that I want to break is this. What time frame is this on? Is this applicable in the 10-minute? Yes, it is, because we have a minimum of 2 consecutive bearish candles, so that is 10-minute range. This is the next range I want to break, and because this is 10-minute range, and this is the 10-minute market structure low, I need to break this on the 10-minute time frame. If I get a candle closure on the 5-minute time frame below this isn't enough. I need a 10-minute candle to close below this 10-minute market structure low. Next, should price close below this, I'm looking here. What time frame is this? Is this applicable in the 15? Yes, it is. Then when price goes down there, breaks through this, then I'm analyzing how price closes here on the 15-minute. Same thing. I don't want the 10-minute, because the 10-minute's already broken structure bearishly here, if it does. I want the 15-minute to break structure bearishly here. And then after a break structure there, at least for me, there's essentially not much, there's nothing really holding price back anymore, because yeah, there's just no supply yet. So you just take the domino effect as it is, and once it breaks these two, this structure low and this structure low is the only thing that can hold price down, and from there I honestly expect it to come down pretty smoothly. So we'll go on the 10-minute, because this is what we are monitoring, and we'll see how price reacts. I'll make that at 1 speed just so we can see what happens. It's gone back up, but it hasn't hit my stop loss. Now, you might be wondering what this drawing was here. Also, so far, so good. Structure has been broken. I didn't exit because there was no reason for me to exit, and I'm already risking very little. I'm risking 5. For me, I'm risking 5% here. 0.5% on this trade. That's what I risked in the real life example. So we've broken structure on the 10-minute. Very good. But if we analyze this, what do we see? Supply, because we have a bullish candle here and we have an inefficiency here. That's nothing to be worried about. And if anything, it could be even more fuel to the fire, because we've already created this sequence of supplies which has been mitigated. So what I would expect price to do from here is, at some point, whether it does this and comes back down, or whether it does where's my tool, or whether it does this and comes straight back down. What I'm expecting price to do, because it has created these supply zones and it has mitigated them, I'm expecting it to at some point in the short term mitigate this supply. I'm not going to get worried if it breaks structure and comes back up, because it can do that. So I'm just going to wait and see what happens. The only thing I'd be worried of, if it mitigate, or if it doesn't mitigate the supply, and just go straight through. And if it does go straight through, then yeah, I will have time to. You can exit the position, but as I said, I'm only risking 0.5%, so I am okay with losing 0.5% of this trade, but I'm set up very well, which is what I believed. So let's see what price does. Will it come back into my supply? And if so, how quick does it come back in? Slowly going up, slowly going down. It's wicked this market structure low, but hasn't not broken structure. It's looking to grab this. There we go. Has it grabbed it? Yes, and you can see it got pretty close to going through, but it didn't. And now all that it needs to break is essentially this market structure low, and then if you'd ask me, it's pretty free flowing after that. And let's speed this up a bit. That was my technical target. Range low. Speed up a bit more. And yeah, it went back up just to grab all this liquidity, and then now I can close this. And then it's hit my technical target, and that was a successful 7.2 risk to reward trade where I risked 0.5%. I could have risked more, but I just like to play it safe and practice a good risk management. So yeah, price essentially did exactly what it was supposed to do. Created all this supply, mitigated the supply, created this supply, mitigated it again, went back down, left a little bit of liquidity here, came back, grabbed it once more, and it just left nothing behind. And yeah, then it went hammering down and hit my TP target. So yeah, this was my ONDO short, which led me to a 7.2 risk reward. I hope you guys enjoy this. If you have any questions, drop them down in the comments. I will try and get back to you guys. And other than that, yeah, apologies for the video quality if it is bad. Apologies for the sound as well. I will be getting a mic soon. I'll just need to get win a few more trades, or successfully complete a few more trades before I go get that mic. But yeah, sorry, yeah, still needed this, so the quality of the videos will get better. Thanks, guys, and I'll catch you on the next one.